Stavros Tousios for M4Markets, and today I'm going to have a quick look at the prices of gold and Aussie against Kiwi. We have had this channel identified a while ago, and we talked about earlier this week about this correction and how that it kind of looks like the predominant trend remains to the downside rather than anything else. And we did say that if we lose the channel bottom, then the next level down is at 1842, the 50 Fibonacci, and then of course we go at the swing lows, keeping in mind the Fibonacci's as well, which the 38 being quite large as in terms of significance, because it's also a previous swing low from the first leg to the upside down around the 1600s. So can we get down there? Well, it is possible, yes, but currently we do actually see some kind of divergence on the 4-hour on the RSI, okay, hidden divergence, which tells me, suggests that we are due a quick pullback, or maybe a reversal, who knows. Even if we go as high as like the 1890 or so, as long as we remain outside this channel, then the situation, it's a little bit more biased to the downside. But at the same time, we have to keep an eye on the 50 Fibonacci going up, right? Because when we do cross above the 50 Fibonacci, then sentiment also shifts to the upside. So these are the two things that we need to combine, Fibonacci's and the channels. So as long as we are outside that channel, guys, now the situation is biased to the downside, and the next level down is around the 1788. As we go up due to this divergence, we should be looking for an initiation back with above the 1870, right? We need to go above 1870 because that is going to give us the chance to revisit 1890, where potentially we might get better signals to go into potential short opportunities here, right? But let's not forget 1897 is also the 61.8 Fibonacci, and if we do recapture it, then things might shift a little bit more upwards. So all of these things that we talked about are very important to keep an eye on. Okay, now when it comes to Aussie against the Kiwi, and this is the 4-hour chart, we have been moving to the upside, but with momentum actually decreasing and weakening. We see multiple divergent signals here, guys, right, as you can see, and that is an indication of the particular structure as well of a wedge pattern. Okay, so we do have a wedge pattern, and it's of the ending variation, most probably because it didn't just start down here, unless if we take all of this into account, all of this as a wedge. But either way, this is expected to see a pullback, because wedges, even if they are supposed to be providing the shift in a particular market structure, they supposed to pull back. Okay, now we have come all the way up above the 50, as you can see in the longer term, right? And we failed to cross 110 or so, back below the 1097, which is the 50 Fibonacci. Now, prices are very likely going to consolidate around here until we see a breakout. And in my opinion, it's most likely to be to the downside rather than to the upside. Now, what else could happen is maybe we're going to go all the way down here, and then we're going to go all the way up here to see a head and shoulders. You are correct. And that might give us a false break to the downside initially, and then a move to the upside to do a retest of that channel, and then continue to the downside, where I would be looking for 107.385 to give us a further close. Now, this is more of a medium-term sort of expectation. In the short term, I want to see this breaking for potential short opportunities, but I do have convincing signals from the RSI that this is likely to continue lower. Okay, now, if we assume the high is in, look, we've got 23, 38, and 50 to take into account. If we continue higher, and of course, again, with an eye on the 50 Fibo, and we'll break above 109.89, then we might just do another leg to the upside in the short term. That I don't think this is going to offer much more upside, to be fair. Still, the risk to reward ratio really favors the downside, but just keep in mind that when we lose the 50s, usually things and biases turn.